Hello everyone. My name is Joy Maleti and welcome to Money Matters. Money Matters is an interactive show that aims to educate our viewers on their consumer rights and provide advice on money-related matters. If you have a money-related problem or issue that you would like advice on, please do contact us and we may be able to provide you with some expert advice. Today on the show, we are talking real estate. What are some of the things that I need to consider before buying or making this life-changing decision of buying property? Well, joining us to discuss and unpack on this topic is our guest, Deslandi Fernando, a real estate agent. Please do join me as we welcome him. Hi, my brother. How are you?
Hi, Joy. I'm good. Thanks. And how are you?
I'm good, thank you. Thank you so much for joining us today.
Thank you for having me.
Thank you. I think I'll just shoot straight into it. Real estate. I think when we think real estate, be thinking property. Yes. What exactly is it?
Well, when we talk about real estate, well, let me just give you a little bit of history. The word real comes from a Latin word which means rex. So they believe to be royal. So what happens is that they believe that back in the days, people would pay royalty to the kings, what we call nowadays rate and tax. So real, which symbolizes royal, then estate is actually net worth of any individual. And not necessarily property, but everything that is, be a car, be anything. So real estate, so it's a royal estate of an individual, the whole net worth.
Is it?
Yes.
That's such a fancy definition.
Yes.
I would have thought land building, boom.
Yeah, that also.
I really would have thought land building. But what are the four main types of real estate?
We have four types of real estate. We have the residential, which is one we all know it, your common houses. And then we have your commercial. Commercial, we're talking about anything that brings you an income. We're talking about your businesses. So those are usually commercial real estate. Then we look at industrial real estate. We're talking about your industries, things that, your big industry that produce things and so on. Then we have as well vacant land. Yes. Vacant land is what we all know. It's just basically a piece of land. Yes.
Okay.
Yes.
So those are the main types. And I suppose you've already mentioned the most prevalent that we all know, which is residential, essentially the vacant land plus property on top, plus a building on top of it, I suppose.
Yes, true.
Buying versus renting property.
Wow, that's a big question. Buy versus rent. I wouldn't want to say buy or rent. But I would like to give the pros and cons, But here's what I would usually advise to someone if wants to buy or to rent. So there are about four things that you need to consider when you want to buy or you want to rent. If you are considering renting, look at the fact, are you planning to stay for more than 2 years in the area? Number two, are you fixing perhaps your credit score? You don't want to have the stress to fix a house when things are broken and so on, your rate and tax to pay, your bond to pay. If you want a stress-free while you're fixing whatever life may put you through, then rent. Then if perhaps you already know that you'll be staying in the same area for the next 5 years and you know that you can afford the property and you actually want a sense of stability and have your name written there on that address, then buy it.
You would buy it. And I suppose it's a life-changing decision, right, to make, because there's a lot of implications that go, with owning a property per se. And I just wanted to zoom a bit into residential property as opposed to the other types that you've listed or that you've mentioned for us. There are various options, obviously, to choose from.
True.
What are those options and what actually informs that decision for me as a buyer?
First, I wanted to say that buying a property is a huge financial commitment.
It is.
It's a bit different than you going to a shop and buy a clothes or something like that.
It's 20 years.
It's a 20 years financial commitment if you're buying through institutions.
Yeah.
But if you're buying cash, that's a little bit different, and cash is king. Yeah. So what should you consider? Primarily, I would say affordability.
Affordability?
Yes, affordability. Don't go look for property that you know that is not within your financial bracket.
Yes.
Don't do that.
Yes.
Affordability, number one. And number two, look at the fact that maybe perhaps you're looking for security. Then maybe you'd consider townhouses.
Okay.
If you're looking for something more, like I'll say, to be free, more freedom and everything, you can have your free title or full title that we would say it. your freehold houses.
The freestanding.
The freestanding one.
Okay.
Yeah. So you go for that one. But then security, affordability, those are, for me, those are primary thing, yeah.
Things to look out for.
Especially affordability.
Right.
Yes.
Right.
Because many change that we go to what we want, not necessarily what we afford. And 5 years down the line, we find ourselves reselling the property and
back to square one.
Yeah.
And I suppose that has implications, right, in the pocket and even in your does it have an impact in your rating?
Yeah, it has a lot.
It does?
A lot.
Unless I've sold it before the bank actually requested for its money, I suppose?
Yes, unless you sold it to a price that can actually cover your initial bond, then you'll be sorted.
But you wouldn't have made any...
you might have found yourself signing the acknowledgement of debt, and which can have implication in your name for quite some time and bouncing back. But it's still not end of the world. But why would you go through that route when you could just focus on knowing your affordability? That's actually the first step that everybody should do when buying a property. First, just check your affordability. Yes.
Can I afford
Can I afford it? Number one, Yeah.
And not just jump into big decisions that you actually can't manage afterwards. And what are some of the key things that I need to look into that actually influence the value of the property that I'm either buying or selling? But let's focus on buying. What are some of the things that actually impact or influence the value of the property?
We live a very fortunate era where information is out there, and it's different from 10 years ago, where some of the information were only privileged to a real estate agent or people directly involved into real estate. Nowadays, with a simple 50 Rand, you can pull up the report on a property. Yes, we can pull out the report of property to give actually the price or the indicate market price on that suburb. So number one, I would say make sure that you know the suburb trend.
Okay, suburb trend.
Suburb trend, yes, number one. And number two, check facilities or amenities that are within that suburb. Yeah, close by your school.
Okay.
Yeah, is there school for children, universities, industry? It's things that that would make your life easier.
I see.
Yes,
I see.
And also now look, when you pull out a report, right? Usually there is also crime rate on those things.
Okay.
So you can actually check: is this a risk area? Yeah. Then you can actually all that make a huge impact on the value of the property itself. And then, of course, now you go into the property itself and check. For example, one of the tips that I usually say nowadays, you need to buy properties that have an open living, like open plan.
Open plan.
Open plan is the way to go now. So make sure that you have an open plan. Number two, don't compromise on the main bedroom. It must be inside.
Don't compromise on the main bedroom.
Yeah, it must
there
be
has to be an insert. Oh wow.
Yeah. Yes, and make sure that it's what the sun can flow through the property.
Okay, so is it north facing?
North facing. Yeah, the location of the property itself. Is it corner stand and so on? And also check what we call latent and patent defects on the property. There are some defects that when you go to a property you can't see them. For example, you cannot see the leakage in the property.
You can't.
I mean, leak in the roof. You can't see that, but there are things that you can actually check, like if there's a crack, infrastructural problems in the property. You see, not necessarily look at the build, the paint of the property, but pay attention to the structure of the property. So that will inform you actually to the actual offer you can make on that property. The property can be sold for 1 million, but if you look at it and say, no, the work that I'm going to do here is plus minus 150,000, why not make a lesser offer? Because that's yes.
So you take into consideration the area, so everything,
Yes.
and how the houses they were selling for
Yes.
in recent times or have been sold for in recent
The
times.
facilities.
And then you look at the amenities, that's what you
Amenities,
said, right?
yes.
The facilities, the proximity to certain areas.
Yes.
And then the
Crime
last one is
rate.
actually the crime rate, yes. And then the
Yes.
last factor was actually the actual home that you're buying.
Yes.
And is the structure defected or whatever the case may be.
And also, you have to consider your needs as a family. For example, if you're a family of 4, you might just need a 5-bedroom.
Yes.
Because
I want you to hold that thought so that we come back to it
All right.
just after this. Sorry, guys, we have to go for a quick break, but please do continue engaging with us on social media using the hashtag MM on SID at the SID Media. We'll see you back right after this.
All of these and more on SID Media TV.
Welcome back to Money Matters. We are still talking real estate with our guest, Deslandi Fernando. If you have just joined us, please do engage with us. Ask your questions, your comments on Facebook and Twitter using the hashtag #MMOnSID. And before the short ad break, we were discussing what are some of the things that we need to look into that actually influence the value of the property and we are actually buy the property. Deslandi, before we actually went into a break, you were just, touching on some of the key things that we need to look into. And one of those were our family needs. Can you just maybe elaborate and expand on that point?
Yes, that's true. It's important to consider the family needs. For example, if you're a family of 4, you might consider buying a property of at least 4 bedrooms. And if you might have a granny, you might need a flatlet. You see, so all that needs to be specified so that you're actually clear on what are you looking for, and makes actually your buying process very easier, not only for yourself, but even for me as a real estate agent. Since once I understand your needs, which is my job actually, to understand your needs, then I'm able actually to assist you in acquiring the perfect property that would suit your family.
I see.
Yes.
I see. But I suppose there should be a compromise somewhere.
Yes,
I mean, depending on how much I can afford.
True. Yeah, but you can always negotiate. Of course, we're never going to find a perfect property.
Yeah.
But you can always find something that you are able to settle for.
That is close to what I need.
Yes, what you intended initially.
And how do I go about applying, say, for a home loan with financial institutions? What are the steps involved, and what do I need to consider?
Okay. What you need to consider, number one, is your affordability, like I said, and your credit score. And those two are usually done it's free. It's a free process. What you need, you can even do it at your own private bank or any mortgage originator. All you need is your ID. You fill up the forms. You submit your 3-month pay slips, your 3-month bank statement. They'll be able to give you the accurate of plus minus amount that the bank would be willing to loan you. And your credit history should be at least 650 and above to actually get a good interest rate. When it's below that, we might have to consider to have a deposit and all that story that we all know. But apart from that, you need to make sure that you do first and foremost your pre-qualification, and if possible, try to get pre-approval.
Yeah.
Yes.
And chances are that has to be a lower rate, because we do know that they often they consider other things other than what you can, some of your other expenses that you don't necessarily disclose.
Yes.
In the application process. But I think you've touched on quite a key thing, which speaks on affordability. True. And that has to come from the individual themselves. Yes. And I think in certain instances, there are certain things that we overlook, right? Such as the other costs involved in owning property. Yes. What are some of those costs that we need to be mindful of that come, as an added cost to owning a property?
Wow. So you mean prior or after owning?
After. So I've bought this home. So remember, I did my pre-application, pre-approval or pre-whatever application. Yes. And I used whatever the costs were that I was incurring at the time. Yes. But now I'm buying this property. But there are other additional costs that I might actually, incur in the process of actually owning this property, or as a result of owning this property. Okay. What are some of those?
Okay, let me just take you first quickly through the process. Then I'm going to talk about also what happened after you own the property. Okay. Primarily, when you buy a property, of course, you've done your pre-qualification. You're now looking for a property. You contact your real estate agent. You're searching, and you know the area where you want to buy. You find the property. You make an offer. The offer gets accepted. After get accepted, go to the institutions. The bank's approved, and we start with the process of registration. There are some costs that most of the purchasers, they don't look at. Number one is the transferring costs. Most of the time, people don't save for that, and they find themselves not having the money actually to pay for the lawyers. And we also have the bonding attorney's fees. That's on us. So you need to look at those are the two costs that does not come with your bond application. Though some banks may consider to give you 105, which means that it would cover your cost, but there are criteria for you to qualify for that, which I do not know some of them. Yes. So it's important to save for those costs.
Yeah.
And those are things that you are responsible to pay as a purchaser.
As a purchaser,
yes, you need to be aware of it because it's your responsibility. The seller has its own responsibility as well. Then after you buy the property, then we have the bond repayment, which is monthly, goes on from your account. Then we also have your rating tax,
which is something that we don't consider, right?
We don't consider. Many times sometimes people don't even open it. They don't even open the account, and they go a year or two.
Are you serious?
Then they find themselves having a huge amount of bill to pay, and they just find themselves stressed about it and not know what to do. So it's important that...
And you have to open this account. You have to physically go and open the account so that you are registered as a rating taxpayer.
Yes, you must. In fact, if you found a good estate agent, he must tell you that after you bought the property, handed over the property to you, he must tell you that now take all the documents that the attorneys have given to you, which prove that you're the new owner of the property, go to the municipality, open your own account. Then you get your rating tax statement, you keep on paying. Then we also have maintenance of the property itself. You need to paint the property from time to time, And as well, if you are in a complex, you have your levies as well. You see that you have to pay. So those are the costs that you need to look at. In fact, if you're buying an apartment, it must be there on the advert how much is the levy on that complex.
Even if it's an estimate, but at least you need to know.
It needs to be there. You need to know what are the additional costs after buying the property.
After buying the property, right? And all of that, you take that into consideration when assessing your affordability rate.
Yes, then you know that your repayment can be even higher than you actually thought. Yes.
Oh, wow. And then maybe just briefly also, what are some of the pros and cons of buying, say, maybe a neglected or rundown property with the intention to, say, renovate and move into it? And do banks often provide financing for such properties?
Well, usually this process is done by investors.
People with cash.
not necessarily cash, but I would say people who understand real estate, people who understand the market, and people who understand how the property industry actually works. Because you need to take into consideration every little thing for you to do that. So people buy for 4 reasons. You buy to live. That's when you buy for a family. You buy to renovate and flips. That's what I'm going to explain now. And then you actually also buy to flip only. And then you can buy to rent when you want to get additional income. So what usually people do, if you want to do buy to flip, which means you want to renovate the house and then sell it to higher price, right? It's important that you buy at lower market value. So it should be at least 30%. What do I mean by that? If you're buying a property for 500,000, try to make sure that you bargain as much as you can for that property. Let's say that the trend of that suburb is 700,000 and they're selling for 500,000. And by the time I renovate the house, I would have invested plus minus 100,000. Then you would arrive on plus minus almost market value, which means that your profit would be plus minus another 100,000, right? Then you say, no, why don't I buy for 450? Invest 100,000, then I arrive to 650. Then when I resell it, I make 150,000 profit.
So we already actually touched on my next point.
Yes.
But before you actually expand on my next point, we need to take a short break. So please do continue engaging with us on social media using the hashtag MM on SID. We will see you shortly right after this. Welcome back, and this is still Money Matters. We are still talking real estate, and we are still talking to our guest, Deslandi Fernando, on real estate, the pros and cons of buying neglected properties, property flipping, and the like. You were still touching on the points of property flipping, right? Is there a standard formula that I can use to make a profitable flip? And maybe just explain what property flipping is.
Okay, property flip is basically buying undervalued property with the intention to renovate and make profit and sell it.
Yeah.
That's buy to flip. But there's another strategy that other investors they use, which we call it BRRRR. It's BRRR. So which stands for buy, renovate, rent, refinance, repeat.
Okay.
Yes. So what do they do? It's the same as buy to flip.
Yeah.
But basically what you do, you buy a property and at undervalued property, but with the potential value of higher potential value. Let's, for example, what I mean is to say you're buying a property for 500,000 rent, right? On a suburb that a potential suburb trend could be 1 million. So which means you'll find a property that has been neglected and it's a bargain buy. You know, you buy it, you fix it. After fixing it, you put a tenant to create a cash flow. And there's a trick when it comes to fixing, actually. Some people think that it's just fixing everything that adds value to a property. No, it's not everything that you fix that adds value to property. There are a few basic things. The roof.
Okay.
The roof adds value in the property.
Oh, okay.
Yes. Your kitchen.
The roof, the kitchen.
The bathrooms.
The bathroom.
Yes.
I'm taking notes.
Your main bedroom must be an in-suite, for example.
Okay.
So those are the few things that actually add value to a property.
I see.
Yes. And then, of course, the location, you can't do nothing about it. It's there and you can't change
The
it.
house is there.
Yes. But you need to look at those things. So don't renovate just for the sake of renovating. Renovate what you know that when the valuator would come out, he would actually look at those things and say, these are the things that actually add value to the property. And then when he looks at it and assess it and says like, okay, now this property that was 500,000 is now worth, for example, 900,000. What it makes it go up? First, the property itself. Second is because of the location of the property. Location is everything when it comes to real estate.
Prime.
It's a prime.
Prime.
Yes. You can't compromise on location.
Yeah.
Yes. So it's important to that. So once you've done that, some people, they refinance, they get a cash, and they go buy another property. And that's how actually most of the people have built their rental portfolio. By buying one property, neglected property, renovated it, refinance, move on to another one.
I see. I see.
Yes.
And the refinancing cost, that can also be, so the refinancing can also, the renovating costs can be financed by a financial institution, or does that have to come from my own pocket?
Usually, people, you have to save up for that.
You have to save up for it,
that, so that it's your initial investment.
It's okay. I see.
Yes,
I see. So you can't expect to
you
go
can
lend
still now your affordability will come into play. Because if you exhausted your affordability, the institution cannot give you any more. But if you're not, you can still go get some and invest in the property, rented it, create a cash flow to recover probably your investment a little bit, then you resell it.
And you resell it.
Or refinance and buy something else. So there are two options there.
And I mean, I suppose we also live in an era where, people travel, they leave their homes for like maybe a considerable 2 weeks at a time while they're away. Can I use my primary resident to actually generate short-term rental income, as an example?
Well, you can look at the various options, You may just consider renting out, for example, the back rooms to give you a little bit of income from time to time when you're if you have one. That's what I say in the beginning. Buy something with flat let. We live in a difficult time, so you need to always think in 2 times ahead of, So it's not about buying a property only. So buy property that can easily turn into an asset to you. An asset in sense, bring you some income to actually allow you to pay your bond and maintain the maintenance of the property itself. So you can actually consult with another institution that you can actually list your property and provide you a little bit of income. Yes, there's nothing wrong with that as long as your papers and everything is correct.
So can I use that as a BNB, say if I'm away for those 2 weeks?
Yeah, you can, as long as you're registered and properly regulated. Because
and I suppose location as well, right?
Yeah, location will be a primary interest of any client to
determinant.
If you're looking at the property, let's say your property is just in suburb. Well, what would make one, for example, to rent for 2 weeks?
Just one to come.
But if you're looking at maybe it's an industrial area where there are professionals coming, in and out, or looking at by the coast. So those are some of the things that would attract someone to actually come and
rent your
rent
property
it for short term. Yes.
Well, thank you so much for all those insights. But before I let you go, any parting shots for our viewers at home when it comes to owning a property, buying a property, or even thinking about buying a property?
I would say take as much time as you can on researching.
Okay,
Research, understanding the whole process, and secondly, I would say find someone that you trust. So it's not about just pick up any agent and go. Try to check the credential of that agent so that actually you can trust the advice that the person will give. And never rush into decisions.
Don't rush.
Don't rush to make a decision. Be happy what you have chosen, and yeah. Yes.
Thank you so much for
for
joining us today and for sharing all those insights and thoughts. And I think our viewers at home have learned so much from you and from this discussion and conversation. I think they're well informed now going into making that big decision of whether do I buy, do I rent, can I even afford this property? So thank you so much for joining us today.
Thank you so much for having me.
Well, there you have it. We have actually come to the close of our conversation and discussion today. But please do continue engaging with us. Share your comments, your views, your questions. You know, are you a property owner? Are you looking into investing in property? Do you have a primary property resident that you're looking into buying? Are you currently renting? Share those thoughts. We are so keen in hearing and finding out from you at home what your views and what your thoughts are on real estate. Well, see you next week, same time, same place, right here on Money Matters. And from me, Joy Maleti, and the rest of the Money Matters team, it is goodbye and God bless.